Alright, now hello and welcome. Now we continue my previous thread and look at the agricultural markets, and after wheat, naturally that's corn. Now those markets are very similar because they have similar underlying structure. They are grain markets used to make food and are grown rather in similar fashion. Now that's why it shouldn't be much of a surprise that they are quite correlated. But actually, honestly, I like corn better because it tends to produce a bit smoother trends and they are easier to follow from traders. And the good news is that it's also we have stats from up until 1970, and we see the similar patterns as obviously in wheat, when slowly but steadily corn made one of the great bull markets in modern era of trading, when it advanced from $120 to almost $400 per bushel, and then slowly started to fall again in late 70s. Then it continued its good up and down trend moves from range of 200 to 400. Those are long-term trades, but in shorter time frames, I guarantee you these are great markets for trending. Great. And this fashion goes up until late 70s, when it bottomed out at 150, and then it climbed again to 350, and then it ranged between 300 and 200. That might not be great, but for short-term traders there are some opportunities here. But of course, eventually ranging markets are evened out by good trends, and then corn almost tripled and then fell back again to its 200 range in the mid-90s. I remember I read about it. There was some issue with very bad crops or something like that. And yes, as it was in wheat, for years people thought trend following was dead and the grain markets did nothing, just the range from 180 to 220, with some exceptions in early 2000s when it spiked from 200 to 300. Of course, comparing to previous trends, it's not that great, but still, if you trade multiple markets, money is here. And let's go slowly further and to these markets and see that with the great commodity boom, corn spiked as well from $200 per bushel in January 2006 to late 700s in mid 2008, and then fell back again. Couple of great trends here, and then it went from 320 in late 2008 to 770 at summer of 2011. I remember those markets because here I just started to trade, and this was one of my first markets that I traded. But of course there were some of ranging markets here and some very choppy markets here, but for short-term traders these markets were not that bad. And subsequently in late 2012 it started its bear market to 330 and stayed within that range from 400 to 300 for next 5 years, when it spiked from 320 till 700, then it reverted to 500, and with war in Ukraine it went to 800 and fell to 585. So as you see, trading has not changed. I think there were market trends in 70s, ranging markets between them, a couple of good trends again, ranging markets afterwards, and now we are trading again. So this is how it was, this is how it always be since we will trade. But nevertheless, let's go to narrower time frames and see how those markets look for eyes of real trading environment. And as you see, yes, there were a couple of good downtrends in early 2010s, and these were long and choppy markets, as it was with wheat, when markets did nothing and you could be barely break even at those years from 2015 to 2020. But at these years stocks were made spectacular moves, but that's another story. So in 2020 it trended and made two relatively good trends in 2020 and 2021-22. And for short-term traders, how that would look even better, because those small moves actually yielded in some decent profits. Because I would want to open the worst trades I can. So this is like this in 2018. The volatility were extremely low, so we wouldn't be losing much either. But these are not the best way to trade. But this is how great markets do. They are standing in the line, and then they are trending a couple of trends, making for those losses. Also stable markets here, one small downtrend here. Volatility is starting to turn, and then from like 2020 these are very good trades, much better than in wheat. Then a couple of ranges again, and then small downtrend in late 21, and in 22 good profit opportunities in war of Ukraine, which followed. Yes, this is due to the fact that future markets has those deliveries couple of times in quarter to grain markets, so it was not possible to capitalize on this move because those contracts rolled over. Profit wasn't there, but that's the life. Nevertheless, as you saw, even for these boring markets, there are plenty of opportunities here, and that could diversify your trading and give you another dimension how you look at markets if you trade these markets. And you'll see more in my next videos, because there are a lot of markets to cover. So till next video, stay tuned, make sure you're following me. Bye.